Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm here on the idea we have with us Riya Singh, currency analyst, technical analyst joining India. Welcome to the show. Here, my first question coming to you is clearly if you go to see with regards to the fiscal stimulus that has been cleared in the US. Now, with that, what's the kind of impact are we expected to see? Because with this, in turn, you've seen an up move coming in on the dollar on the back of the new virus strain coming in from the UK as well. So, how would you expect the dollar to move from here on?
Uh, See, Hiral, we were expecting the package to come forth, but after months of dragging of the negotiation, and when the deal was finally broken, and obviously it was a quite a welcome move that was done on behalf of the Senate and everyone, and with a massive year-end legislation combining, a fiscal package of around $900 billion. Uh, will be given as a pandemic relief. So, will the package come forth sooner than the year-end holiday? That is coming forward. That remains to be a question because obviously the legislation is around 5,600 pages. They'll take time to review it, and till the time it gets on the desk of Trump to sign for it, I think it will take another week or so. And yes, they have taken a step so that there is no going back from this 7 day uh, you know a 7 day legislation is what the resolution that they have signed temporarily, so the government will get its funding during the period till the Trump finally signs the proposition. So on behalf of that, I think that was a very welcome move that the even the US market was expecting at the time. The reason why the dollar is getting stronger is because there is a holiday season that is coming in, so obviously everyone wants to take their position on a safer side, and with the virus again taking its strain on the economy, I think this is what has uplifted the haven in the today's and the yesterday's US session. So this is the major optimism that is fueling the dollar right now. And though there is a little bit turnaround, but I think it will go in green in the in the holiday session as well. So we can see some green momentum on the higher side in the dollar index as well.
Right. And with this, if you see with regards to where the pound is concerned, the kind of losses that we've seen, they have gone down, and this is mainly on the back of the developments that we're seeing with regards to Brexit. Do you think we will be able to see the pound sooner or later once Brexit settles down?
See, the major reason why the sterling was plunging was obviously because of the concern that the UK is facing right now, the resurfacing of the pandemic. So, what was happening is the UK just established its supply chain. They were just getting back on their economic foot. And with the recent surge into the virus numbers and UK going under strict lockdown as well, various transportation mode was also shut down. The flights are not uh, uh, the flights have been shut down. There is no one going in or out of the UK altogether. So I think this is what strained the pound in the last week, and there was a massive loss that the pound took against the dollar in the last week. But apart from the pandemic, the other factor obviously that we know that is straining the pound and giving it a haywire direction is obviously the Brexit. Now what has happened was over the weekend, there was a quite stretch between both the parties, that they won't be coming forward with any compromise, and UK had the danger that they will be walking out with no deal. So this was acting as a second, bearish force on the UK, on the UK pound. So what happened yesterday is that the UK Prime Minister came forward that they'll be working on they will be working on some compromise. The whole deal is revolving around this fish territory. Fish are acting as a chips on the post Brexit trade. So uh, where they were negotiating that there will be a 60% cutoff from the EU side on the whole fishing territory. Uh, EU has come forward that they'll be okay with 25% cut, because there are countries like France and Denmark who has huge fishing industries. So that is the reason why this fishing territory negotiation has became such a large barrier in the trade, in the trade getting finalized. So but with the the recent statement that had come forward from the UK, that they'll cut off on, they'll be they are proposing a new deal, and there will be some middle ground that will be reached, and EU has suggested 25% cut on that. So I think going forward, if this positivity remains, there can be a some pullback, and pound can can retrace some of more losses against the dollar. But one thing that needs to be considerate, while taking position into the pound coming forward, that it will remain in quite a haywire. It will be in a zigzag momentum. So you know because obviously, apart from the this fishing deal, there is again the transition period that is playing forward. What will be the transition period in whatever the deal, in whatever the the terms that have laid down into the deal. So whether it will be a 5 year, 3 year, 10 year, so that will also play a huge part. So I think it will drag more. The talks will be dragged more, and first Jan is what we are looking forward as a timeline from the Brexit point of view. But going forward, pound will be in a haywire and quite sensitive to the Brexit news.
Right. And with this, if you see the way the rupee has been performing, it's clearly lost the most in the month against the dollar. How would you read this entire, movement right now on the Indian rupee as well?
See, the Indian rupee, if you look at the current, the current momentum, it did after correcting, after a huge correction when where the RBI was not playing its part with the intervention, and it did let the rupee free float with respect to the supply and demand. Now, what happened was the safe haven gained in yesterday's session. Okay, and obviously the whole renewed on the virus thing definitely leads a back leg on the emerging market currencies. So this is what happened with the rupee as well in today's session, where it was, apart from apart from the virus concerns that came forth in yesterday's, where it lost around, it tested around 74.10 and such, and plus there was a hundred, there was a OMO that had to be happened on the RBI side, in which RBI didn't bought any bonds and such. So this again played in the negative territory for the rupee. The thirdly is the renewed concern on the inflation part. Now, if you look at the minutes that was released on Friday from the central bank, they are letting the inflation go. They are not, and they'll do so. They'll keep the inflation high, and on the contrary, they'll keep the interest rate low. But what needs to be understand is this will weigh on the economic. Yeah, we can understand that they are working with respect to getting the economic back on track, but in the longer run it will affect the process, because there will be quite a pressure if the commodities price rises more. and the inflation rises more, obviously it will suppress the purchasing power of the overall economy. So this is what currently is weighing, the currently weighing on the rupee, because there is no proper guideline that has come forth from the central bank. Even in the previous meet, they are keeping the interest rate at uh, after cutting around 180 basis point, they are keeping the interest rate there itself. And we were expecting this at least until the December.
Mm.
So there is no proper guideline as to what will happen. Uh, will the intervention again take place into the rupee right now? And how much bond purchase will the government with the central bank go forward with? So this is what getting the rupee in a consolidation phase. And I think with the again the virus pressure and the safe haven getting back on track, the overall the domestic market losing its momentum, it did get quite the yesterday session, if you look at the Indian domestic market, it did correct it quite a bit. So this will lead the rupee to trade in a very consolidation phase, at least for a coming session. I'm for I think it will remain between 74.25 to 73.75 levels in the coming session.
Right. So with this, then, with the understanding that you pick up, what are the strategies that you would recommend?
I think if you look at the intraday session, it has remained quite consolidation for the rupee, and the momentum that we are seeing is definitely on a weaker side. So if the level that one can go short is 73.88, this is the safest level that one can go forward for taking a short position into the rupee. So short below 73.88 for a target of 73.75, and follow a strict SL of 74.05 for the rupee. The pound is again gaining forward into the session. So 90, it is currently trading at around 99.07. The major support into the pound right now is around 98.65. So if uh, the pair tests the 98.65 and hold the same, you can either go for a buy on the low, or you can definitely go buy above 99.50 levels. So look for these levels, because pound will be in a very zigzag momentum going forward. So 98.65 is a major support. You can uh, buy from the lows, or you can buy from the high above 99.50. The target that you can keep in mind is 99.75 into the coming sessions. But be very careful while trading into the pound. The next strategy that you can go forward is with the JPY INR. Uh, though I think you can definitely buy into JPY INR. You can keep a strict SL of 71.30 into the pair, and buy at around 71.55, 71.50 for a target of 71.75 into the domestic yen.
Right. And with this, another question I want to take with you is with regards to where the yuan is concerned. Clearly, if you go to see with regards to the yuan, now ahead of the holiday season as well, it's a pretty flat trade that we have been witnessing. Plus, there is an impact coming in on the back of the new strain, and that's dulling the vaccination optimism as well. Taking the yuan into consideration, another news that came out is that they're planning, China is set to reduce dollar's influence on yuan trading basket. How do you see this entire scenario panning out for the yuan?
For the Chinese yuan, okay, so Chinese yuan, in even if they do so, there is a lot of you know if you look at the China stance right now, if they do so, if they let go of their influence on the yuan, I think it will be a very uh, uh, the battle that they were fighting, with whole trade deal with the US and everything. I think they have still not reached a very middle ground. After the first trade deal phase, there is again a lot of tension between the two. Now, what you can look forward is with the president elect Biden coming into the picture. Okay, maybe these steps have taken forward in respect to evaluating the whole Biden position, with respect how he will take the US economy and so forth, how the stance of the Biden will be with respect to the China. So this is just the initial phase that is going forward with respect to the China. Will they actually do so is something that needs to be looked forward to. Um, I think when the Biden takes his place in the White House, then we will have a more clear picture on what will his stand be with respect to the China, and what will he do with respect to the further trade deal that is still awaiting the consideration. It has lost its gist among the pandemic and the economic recovery and so forth, but I think this is one of the major point that the market will be looking forward after the dust of the pandemic and everything settles down. This will be the first thing that needs to be handled, in the coming days for the Biden, for the president-elect Biden. This will be something on his page as well. So I think China going forward with its influence of the yuan will definitely help with the inflows from the US. The whole industry that was facing quite a just because of the inflows and the restrictions of the inflows and so forth. And then there is UI pension, the UI company ban and such taking place. I think it will release some of the pressure, but the actual play is still that needs to be seen. And the Biden take on the whole China issue is something that needs to be looked for to get a clearer picture on what holds ahead with respect to the US China deal.
Right. So clearly, the wait and watch mode coming in on that front as well. Thank you, Riya, so much for joining us on the show. Thank you, participants. Appreciate you guys joining in as well. And we will see you back again on Thursday at the same time at 3:30. Thank you so much.